Hello and welcome to the week ahead. So just in terms of the focus from last week, just to recap, of course, the PBOC was one of the main centre points of price action within the marketplace. So this is after they intervened with the Chinese yuan and altered its reference point against the US dollar. But just in terms of how things have started this week, they did adjust it again, but it was just a very minor adjustment and as such hasn't caused as much of a stir in the market. However, one thing that is for sure is that Chinese growth concerns do very much remain a key issue, so look out for any further developments here and any potential further action taken by the PBOC in China. However, overall it is possible that a lot of focus will actually reside stateside, so they have a couple of big US data releases, notably the latest US CPI report from the US. So this could very much be a critical report given how data dependent the Fed are, and a lot of people calling for a potential September rate hike. So if we do get a stellar inflation report, this could very much leave September on the table. However, if it does fall short of expectations, then may lead the market to take a more cautious outlook and maybe look towards more of a December kind of timeline. But on the topic of the Fed, we do also have the release of the latest FOMC minutes, although it isn't necessarily possible to see how useful they may be, as it is likely they'll just reiterate that they will remain data dependent, so therefore the US CPI report itself may actually be more important for market expectations with regards to Fed rate liftoff. Then just elsewhere across the pond in the UK, we also have our latest CPI report, so this will be an interesting one, given some of the more hawkish rhetoric that we have seen from the Bank of England over the past few weeks and months. So this will also be a key metric used in assessing the potential lift-off for the BOE, with Forbes over the weekend saying that the BOE should lift rates well before we hit the 2% inflation target. And finally, just from a Eurozone perspective, we will continue to monitor the situation for Greece. So of course you have the German vote in the Bundestag with regards to support behind the latest Greek third bailout. So that a lot of the calls for Germany has been a lot of friction in the Bundestag, but a lot of the Germans wishing to make sure there's definitely going to be IMF involvement in the bailout. So we'll be looking out over the next few days if there's any further comments or developments on this front. That's pretty much all from me, and thank you for watching.